Hi traders, Smooth Forex here. Welcome to another section of the free Forex class. Yeah, today we're going to be talking about market trend and sorry for the delay. I've been busy with one or two things, but today we're going to be talking on market trend. And now, but before then, I actually want to bring this to us, which is the types of traders we have. We have three types of traders, which is what the swing trader. We have the swing trader, we have what the day traders, and then we have what the scalpers. And now these traders actually have the time frames they use in trading. Each trader actually has what the time frame they use in what they use in trading. Now, if you looking at my screen, what we have here now for a swing traders are those who start the analysis from the monthly time frame, weekly, and then they execute on the daily and the 4 hours time frame. And now, how does this thing work? Now, on the monthly time frame, what do they look out for? The trend of the market, which is what we're going to be talking about today. You look for what the trend of the market in the sense that where is the market going to currently? Is it going to the upside or is it going to the downside? On the monthly time frame, they check the direction of the market using the monthly time frame. And then after checking the direction of the market, they now come down to the weekly time frame to check the structure of the market. There's a difference between the trend and then the structure. There are two different things. Now, they first check the trend, and then you now come down to the weekly time frame. You guys can see it, to the weekly time frame. And then on the weekly time frame, they're looking out for what? The structure of the market. Is that structure that's going to give them when to what enter the market. And once they've gotten their structure, it now come down to either the daily time frame, which is what we're having here, the daily time frame. It comes to either the daily time frame or the 4 hours time frame to take their what entry. Their entry for new members, those who are not familiar with entry, that is where this particular time frame is where they are to take either buy or sell. This particular time frame is where they're going to know if they are to take buys or sell based on what the weekly time frame or structure gave to them. That's for swing traders. And for swing traders, they actually after executing their trade, they leave the market for about most of them can leave their market for about 2 weeks, months. They can even leave the market for like 2 months, 3 months, and so on. That's for what swing traders. And most times swing traders don't come into the market every single time, since their analysis is always spotted on the monthly time frame. Always started at the monthly time frame, and then they come back to the weekly time frame. And now each candlestick, like I said, based on the last class, each candlestick on the monthly time frame is what they're going to be waiting out for. For example, now they have the market moving up, but before it's going to come down, for them to like take the market to the upside, they might actually wait for weeks before this market comes back to their entry point. Before the market comes back to this point, and when they're going to buy. Now the market eventually gets back here after so many weeks, and then they execute right here. And now each candlestick signifies each week. Now you know how many weeks they're going to be holding this particular trade before it gets to this high. That's why most times swing traders tend to like hold their trade 3 months, 4 months, 5 months, 6 months, to whenever the market actually gets to where they're going to be leaving it. That's for swing traders. And now we also have the second type of trader, which is day traders. Day trader actually come to the market within a day, 2 days, and then they do the analysis. And now most of them start the analysis just like myself. I start my analysis from the daily time frame. You can actually start your analysis also from the monthly time frame, but I use the daily time frame. I start my analysis from the daily time frame to check the trend of the market, to check the direction of the market, and then after checking the direction of the market is actually going down or it's going up. After checking the direction, I now come back to the 4 hours time frame or the 1 hour time frame. And this particular time frame, this is where I tend to see the structure of the market. If, for example, now I found that the trend of the market is bullish, which is bullish in the sense that it's going up. Now I come down to my 4 hours time frame. On the 4 hours time frame, what am I looking out for? Since it's bullish, I'm seeing on the daily time frame. Now I want to start seeing something like this on the 4 hours time frame, seeing this bullish structure. And now the current structure will determine where I'm to take my buys. Because let me now bring this to our notice. If you're on a bullish trend, you should always wait for buy setup. Don't worry, when we are treating market structure on the next class, that's what we're going to be talking about. Market structure on the next class. I'm going to explain this. Now, this particular movement is what I'm looking out for on the 4 hours time frame. I would have explained that on the swing when I was explaining swing traders. Now, this particular movement, because the trend of the market says on the daily time frame, it states that the market is going to the upside. And then on my structure time frame, I want to see this kind of structure being printed out before I take my look at what take my entry. And now once I've seen this structure, and I look at what, okay, where am I to take my entries from? Now maybe for example, the market pulled back into a low. Let me take this off. And now the market been buying, came back down, but and now it's now back into area where I was like, okay, I'm to take what, take my buy right from here and then continue the trade. Now the market has gotten to this point, and now what will I be looking at for? That is when now this is when I will now go down to my entry time frame. Now, my entry time frame, what we are seeing here as a day trader, yeah, I'm going to be using either the 30 minutes time frame or the 15 minutes time frame. Sometimes I go down to like the 5 minutes time frame to look for based on where I see structure on the lower time frame. And now, if for example, now I'm seeing this on the 15 minutes time frame, on the 15 minutes time frame, I'm going to wait for my what, confirmation, and right there is when I'm going to what, execute and then ride the trend all the way to this eye I saw on the structure I saw on the 4 hours time frame. I'm going to ride this particular movement right from here to this high. And I'm most like I said, day trade actually leave their trade 2 days, 3 days. Some of them actually leave it a week. You understand? We leave it a week, but at least a day, 2 days, 3 days. That is how the day traders actually what leave their trades to like play out. Unlike swing traders that leave their trade weeks, months, and so on. But day traders, most of us leave our trade for like 2 days, a day, 3 days, I guess 1 week, 2 weeks, depending on how market actually move, the distance of the structure of the market we're trading at that particular time. And now the last one we're having currently is scalpers. Who are the scalpers? Scalpers are those ones who come into the market real quick, boom. Within the times I'm actually using to buy for example, now we're having structures like this on the four on day trader. The day trader are looking to come down here, and now we're taking buys from here. Now scalpers right from here, they come into the market real quick. They start the analysis. Let me explain this. They start the analysis what from the 1 hour time frame. Are you with me? They start the analysis from the 1 hour time frame. On the 1 hour time frame, they're going to what? To check the direction of the market, and then they come down to the what? 30 minutes or the 15 minutes time frame to look for what? Structure. To look for what? Structure. If the market is actually what? Selling, or the market is what? Buying to the upside. That is what they come to this particular what? Time frame to look out for. And now once they spotted the structure, they now come down to an entry point, come down to their entry time frame, which is what? The 5 minutes or the 1 minute time frame. And now on this particular time frame, the market, like I said, based on what we spoke the last time, candlestick, each candlestick on each time frame prints out the candlestick on that particular time frame. If it's on the 5 minutes time frame, each 5 minutes, after every 5 minutes, new candlestick opens. After every 5 minutes, new candlestick opens. After every 5 minutes, new candlestick open. And now, on the 1 minute time frame, after every 1 minute, each candlestick open, the previous one closes and the new one opens. After every 1 minute, the previous candlestick closes. After every 1 minute, the previous candlestick closes, and then a new one opens based on the particular time frame you are on. And now, based on what we're having right here, you see this trading view, we have series of what time frames up here, series of what time frames up here. If you're using your phone, you will see list of on your MT5, you will see list of what time frame. Those time frame actually will have how they all react on the market. Just I can't be starting my analysis on the 5 minutes time frame and then now going to the 1 hour time frame to look for entry. That is poor. If you want to start trading, if you want to start doing your analysis should be from the higher time frame based on the kind of trader you are. There are some traders who don't know how to hold their trade for long. If you're a trader, you don't know how to hold your trade for long. Like if the market is in profit, if it's in profit, you're quick to like, okay, secure your profit and then you're out of the market. That means you're what? Or you're what? A scalper. If you know this kind of person, you like seeing your money. Once you see your money, you take your what? You take your profit and then you're out of the market. That means what? You should be what? You should be a scalper. And now don't just, because I see most of my students here, just come down because they want to scalp. They come down to the what? 5 minutes or 1 minute time frame immediately. They're starting what with the 5 minutes, 1 minute time frame to do the analysis to check the direction of the market. And now, what if, for example, now let me explain something to you guys. Now, let's assume you guys are coming to the market. You want to scalp a particular pair. You're like, okay, then you're now taking your chart to the 5 minutes time frame. You're taking your chart to the 5 minute time frame, and on the 5 minutes time frame, the structure of the market is looking like this. Are you guys with me? The structure of the market is looking bearish. It's looking like what? It's selling, right? It's selling. Now, on this 5 minutes time frame, you're not looking to sell the market. And now, on Your structured time frame, which is what this 30 minutes time frame you're having right here, you've now what you ignored your structured time frame and your what the time frame what to identify the trend. Now your trend on the higher time frame, your trend is saying the market is what buying. And now, based on you opening what the 5 minutes time frame, you are now coming to the 5 minutes and you are now seeing what market structure what going downwards. And now on your what on your trend, which is the 1 hour time frame here, on your trend time frame, you're seeing the market is what is being bullish, and then your structural time frame what is giving you what bullish direction. And now look at what we're having right here. Now let me now bring this down. Now this is what we're having here. You're having this on your 5 minutes time frame. Yeah, you're having this on your 5 minutes time frame. This is the 5 minutes time frame. This is the 5 minutes time frame structure here. And now on the 30 minutes time frame, which is your what the major structure time frame. This is what you are seeing on the what on the 30 minutes what time frame. You're seeing something like this on the 30 minutes what time frame. And now look at this. And like I stated at the beginning of last class, I said the higher time frame is what gives you what the bigger structure of gives you the bigger structure of the trend. It gives you the what bigger direction to where the market is heading. And now look at this, and like I state, like anytime the market what sellers sell to the buyers will place a new what come to the market to like what buy again for you to sell to them, right? Now look at what we are based on what I taught you, that same scenario I gave us at the beginning of the class. Now look at this. The market sellers are actually what sold to all these buyers that were here, to all these buyers that were here, to these buyers that were here, these buyers that were here. Sellers would sold to all of them. And now look at the way it's looking like on the 5 minutes time frame. Don't worry, guys. On the next class, we're going to be learning structure. That's what I'm going to be explaining how all this works. Now look at how the market is reacting. Now look at this whole movement you're seeing right here. This whole sell movement you're seeing right here. This is it right here on the 5 minutes time frame. This is it right here on the 5 minutes time frame. And now you're now like looking to what sell the market right from here. This is on your 5 minutes time frame because you want to scalp the market, right? Because the market is at what market buyers are what came into the market, and now it's not time for you to what sell to these buyers. Now you're not getting something wrong. Now your higher time frame structure is telling you what it is time for what buyers to what come in to what purchase new products, and now buyers will now what come in, and now you are now taking sell from here. Me that I'm actually trading with, I am trading with what the bigger trend. I will now what take my buys right from here, and that's why most traders actually come into my come into my gym and like, okay, boss, you're trading against the trend. Why them they tell me they are actually what scalpers? I mean, they are all scalpers starting the analysis from the lower time frame. They have no idea of how the market actually runs. You start the analysis from the lower time frame and then going up to the higher time frame, seeing my analysis, and they're like telling me, and I'm trading against the trend. Have you gone out to the 5 minute structure to see how the 5 minute looks like? And now you're taking sell from here for the market to what go down, and I am taking what buy from here to what purchase new product to the upside. I'm now trading what alongside with what the trend of the market. And now definitely once you now take your sell right from here, the market will definitely what take you out because you are trading against what the trend. This is the bigger picture. Let me take this off and do a better explanation. Now this is the bigger picture. Market sold to the buyers. New buyers came in. Now market sold to them, and now it's enough time for you to what buy. And that is when you're now seeing something like this. You're now seeing a structure like this on the 5 minutes time frame because you're a scalper. Now you're not seeing something like this. Now this is it. Yeah, my market got back here. You want to sell, and then this small movement you're seeing right here on the 30 minutes time frame. This is it right here on the 5 minutes time frame. And now you're not like, okay, it is now time for me what for sellers to what sell to these buyers right here. And now that is when the market now what keep pushing to the upside, all the way to what buy the what market again, and then so sellers can actually what sell to them, and then you now take your what sell right from here. You take your sell right from here, and then the market will take you out. That is how most traders actually what fail. Even same thing still happens to what day traders. Same thing still happens to what day traders. If you're starting your analysis from the 4 hours time frame as well, if you're starting your analysis from the 4 hours time frame, and then on the monthly time frame, or let's say the weekly time frame structure, here, the structure is bullish on the weekly time frame, and then it is now what coming back down into a new low, selling to what all these buyers. And now your 4 hours or your 4 hours structure is looking like this on the 4 hours time frame. It's looking like this on the 4 hours time frame. This movement you're seeing right here, this is it right here on the weekly time frame. This same movement you guys are seeing right here, this is how it's going to look like on the weekly time frame. Now you have to understand that the higher time frame actually gives you what the bigger trend of the market. I'm actually explaining market trend already. Gives you what the bigger trend give you the bigger structure of the market. You cannot start your analysis from the lower time frame and then to the higher time frame. It has to be from the highest time frame, then you come down to the lower time frame. Like I said, when we were treating the next class, which is market structure, then you're going to have in-depth of how you're going to have full knowledge of how market structure works. And I feel it's gonna be very difficult for most of us to understand highs and lows and how it actually what runs. And now with all this that I believe you're able to like understand how each this traders type of traders that we have and what time frame all actually what works with. So like I said, if you know you are good in holding trade for long, you're not scared of like if your profit actually what been taken and then you can hold your trade for a long period of time, you should be a swing trader. If you know you just want to come into the market, hold your trade for a day, 2 days, you should be a day trader. And then you're this kind of person, you like coming into the market and then you take your profit and you're out of the market for the day, you should be you should be a scalp. And now let's dive to how to identify market trend. We have three types of market trend. We have three types of market trend. And now the first trend is bullish trend. We have the bullish trend, which is market looking like this. We have the market looking creating highs, lows, highs, lows, highs. This is a bullish a bullish structure. And then we have a bearish structure, which is market creating lows, highs, lows, highs, lows, highs, lows. And this is and the last one is we have a consolidating structure. Market creating equal highs, equal lows, equal highs, equal lows, equal highs, equal lows, and so on and so forth. And now look at it. When it comes to forex trading, when it comes to trend of the market, you only want to trade the market when it is trending. You only want to trade the market when it is trending. You only want to trade the market when it is trending. And now I'm going to explain something to us. Like I said, we only want to trade the market when it is trending. And now look how we have three types of trend here. We have the bullish trend, the bearish trend, and then we have the consolidating trend. And now these two trends you guys are seeing right here, this bullish trend you guys are seeing here, the bullish and the bearish, the bullish and the bearish trend you guys are seeing right here. These are the major trends you should focus on. These two are the major trends you should focus on. You see this particular market, this particular structure, right? This particular trend right here. Do not trade the market when you're seeing the market pull out like this, creating equal highs and creating equal lows. You only want to trade the market. You only want to come into the market when it's giving you structure either to the upside or giving you structure either to the downside. And now another advantage, another way you can actually identify a trend on the market is through trend line. Now let me now take us to a real chart. Let me take this off. Let's take us to a real chart. Now, if you look at what we're having currently right here, now, like I said you can use your trend line to point out the direction of the market. Now, if you're to pull out your trend line, this is what I use as my trend line. Now, you start from this point right here. Look at where this is actually moving to. Look at this. This is my trend line. I use this as my trend line. And now, where is the direction of the market? As you can see on the screen, it is definitely going down. You can see this is actually a bearish trend. And now, if you pull out, come back here, and then look, I'll pull out your trend line as well from here, starting from the lowest point right here. Starting from the lowest point right here. From the lowest point right here. Drag it to the all the way here. And then you do this. Now, what kind of trend are we seeing? We're seeing a bullish trend. This is definitely obviously a bullish trend. And now we still have to move all the way from here again. And now from here, you can see what we have here again. This is also a bearish trend. If you continue backtesting, you're gonna see different kind of trends. If you see here as well, from here to this point, you see a bullish trend, and as well from here to this point is a bearish trend. Can you see how easy it is for me to identify the trend? But then, like I said, in the next class, which is structure time frame, you're gonna understand how to identify structure, because market actually moves. All this particular trend moves in highs and lows. Market creates higher highs, higher lows. For a bullish trend, this is what we call higher highs, higher lows. For a bullish trend, let me use this bullish trend as an example. Let me use this as an example. Sorry, guys. Okay. Now you see the market on a bullish trend, definitely the market is going up. Market will create higher highs for us, which is HH. higher highs, higher low. Then goes up, must create what? Give you a what? A new higher high before it gives you what? A new what? Higher low. I'm already giving us what? Explaining what? Market structure. And now for a bearish trend, it must give you what? A lower high, which is this point, lower high or lower low. A lower high or a lower low. A lower high or a lower low, and then market is giving you what? A lower high, right? A lower low. Now it's coming to what? Create a what? A new what? Lower low before it pushes back up to create what? A lower high, because it's what bearish. You're looking what? To trade the market when it is what? Selling. I believe, and now I want to give us an assignment, and I want you guys to drop it in my DM. I want you guys to open any pair of your choice, and then with what I just did, what I did on the screen right here, how to identify structure with this drawing I did right here on the screen, this particular drawing I did right here with my trend line. I want you guys to do the same drawing and then send it to me, and then I'm going to be scoring you guys. You can do it on any pair of your choice. You draw different kind of trends. If you're able to spot out the trend, then we're good to go. I want you all to actually submit this particular assignment to me after watching. Immediately you watch this video, you do the assignment, and then you submit it to me. And that's going to be all for today. That's going to be all for today. On the next class, we're going to be talking on market structure. We're going to be talking on market structure. And with market structure, you are good to go. If you're able to understand market structure, you are good to go. With this market structure, I'm going to teach you, you should be able to start analyzing your market yourself. With what I'm about to teach you right now, with market structure, what we're going to be having in the next class, you should be able to start analyzing the market. The market is going to start looking clearer to you. Because I know most people actually find it very difficult to understand how the market actually moves. But then with market structure, and now what I've actually given you to you, which is trend, how to identify what trend using your trend line. And then after the next thing is market structure. So that's going to be all for today. Thanks, and see you in next class.